Hey everyone, welcome to Smart Investing. Uh, First off, my phone is only at 13%. I didn't charge it earlier, so I'm gonna try to. I definitely gotta make this quick because my battery won't last that long. I don't know how long it'll last. So let's begin. This is the banking services sector. I have 5 stocks. We're gonna go over financials. Uh, and take a look at that and just a basic overview. We're going to go over some fundamentals and some technicals and all the works. First stock up, OFED. The real name is Oconee, as you can see up top, Oconee Federal Financial Corporation. So right off the bat, looking at the chart, looks pretty flat. I don't like it. It failed. Volume is pretty bad. This stock is not even popular. Market cap 132 million. It just shows me it's not a popular stock. Not a lot of people like it. So, 52-week high, 52-week low. Difference of $7. Now, if we look at the share, this is weird. Shares outstanding. Then we have the free float. There's a load of shares out there that are acquired. You can easily see over 3 million shares. Close to 4, so I say around 3.5. Close to 3.5 million shares. But again, this stock is not even being traded, so it's weird. Anyhow, they do pay a dividend at 10 cents a quarter. Earnings are 0.82. Compared to their peers, that's pretty low. Not a good sign. Now, we're going to look at some annual estimates. So, return on equity for 2022, 0.75. I mean, these numbers are pretty horrible. 86% for debt. Lower than other people, but still pretty high. Net income has been the highest it's ever been for 2022. Now, for the balance sheet, again, I said 86%. We're going to keep rolling down here and see what other information we have. Cash flow is negative. So, overall, this stock is a no. So again, shares have been acquired. We don't know by who. But 3 million shares, it's a lot. So I guess even with these small gains, $1 or $2, that's got to be pretty much sold in increments, and I would say daily increments, because offloading over 3 million shares is not going to happen overnight. So going to move on to the next one. FSBC, 5-Star Bank Corp. Apologize for that. So, FSBC, market cap at 454 million. Showing me that it's slightly undervalued. Earnings per share is at 2.5. Market cap, again, 454 million. So, $500 million company. 52-week high and low. Difference of $10. Not bad, but we're going to look at the chart. On a 5-year, looks bad. It went up in 2021 and it stayed choppy actually for 2022. And then it dropped down, stayed flat, went up, stayed flat, and now it's dropping down. So a bunch of shares in these bank stocks, for some reason, they're getting popular. So we have a difference of shares So we have about at least 6 million shares that are acquired for the stock. We don't know who has those amount of shares. I'm guessing it's the majority of shareholders. I mean, the majority ownership of the shareholders, meaning, the board of directors. I wouldn't want to own, me personally, I don't see this as a growth stock or a long-term investment. Again, I only see it as a short-term. So I'm going to see some offloading this quarter, or probably some buying now and then releasing shares in the next quarter. So again, this is another stock that I don't see it as a good company. It's just a cheap company just to make money. That's all it is. And then again, it's not that active, but for some reason, that's a crap load of shares to be having ownership of. So dividends per share, it's been flat. They started paying dividends in 2021. They haven't done any splits. So trying to see now into the financials, they have beaten their earnings this whole year. Now for Q4, they've upgraded that estimate, and it looks like their earnings are growing. So something right must be going on with this company. Their debt is at, I'd say close to 90. We're gonna look at the balance sheet, but it looks like this company's pretty new. The margins is not showing anything, but their return on equity is getting better by the year. ROA about the same. So their net income has dropped from 2020 going into, no, sorry, it's gone up from 2020 to 2021. And then their balance sheet for, I don't have anything for 2022, but we're going to look at the last 3 quarters. It's well above 90%, as we can see here. So, I don't know, that average at least around a 91%. Pretty high comparing to their peers. Now, for cash flow, want to see that. So, I don't have anything for 2022, but I'm going to look at 2021. So, we have here positive cash flow, which ain't bad. So, this company is in California. They call it 5-star bank, and hopefully it can be a 5-star bank. For a long-term investment, I'm going to say no. But again, I'm going to keep relaying that message. Bank stocks are starting to be popular. I don't know why. And I don't know if the trend is going to continue next quarter, but we just have to pay attention to it as we go. So again, I don't see anything good from the company. I mean, it's not a growth stock. Quality, I would have to, when it comes to quality, that's the only factor I'm not sure about, because that's something where I would have to actually look at the website. I wouldn't say be a customer, but to know their business model and know how they work, or if you wanted to sign up, everything looks good and dandy when you first sign up, and they'll, basically sugarcoat everything. And this is for all businesses. They want to look professional and appealing. They always want to say the best about their company until real reviews come into play, and you still hear about reviews. That's the only honest opinion that you can get. It's not from themselves, it's from other people. And the more opinions that they get, the better. So that's usually how things work when uh, you have like reviews and all that. So anyhow, moving on to the next company, gonna look at that. So next company that we have, HSBC. I believe this. I heard of this company. It's a Chinese company. So, $121 billion market cap. So corporate headquarters, I believe it's in China. I don't know where in China. So earnings per share is at 3, 52-week high and low, difference of 14. Obviously, market cap is insanely high. So this is one of the bigger companies. Volume is very, very active. So for dividends, paying at 1.3. Show me it's undervalued. So for this stock, uh, shares outstanding, it doesn't seem like a lot of people are buying this stock. Now, are they any good? And we're going to see for the analysis. For the value, it's saying that it's cheap. I mean, it's slightly lower than the what I'm seeing. So, yeah, it is undervalued. I can't say how much, but I can say that it looks like a fair price. Quality, again, I don't know. Highest rating it got was the value, so just the price alone. Momentum, it's hard to say because you know volume changes day to day. Growth stock, I don't see it as a growth stock or an income stock. Quality, that will have to be looked into when it comes to the business model again, and maybe some reviews from customers, or you can Google map it and see reviews from how people rated this bank and shared their experience with them. Now, for earnings calls and their estimates and actual numbers, it's not showing me anything. For the debt, showing me 93%, pretty high. That's not favorable. Now, net income, you see here, it's actually gone down quarter to quarter, but for year to year, it's actually gone down ever since 2020. Then 2021, it's gone up again, and then stayed pretty much about the same from 2021 and 2018. About the same net income. Now, cash flow, I'm gonna look at that. So, definitely a crap ton of cash flow. I just don't know what currency they are doing. So it is US based. So I'm assuming they have a corporate entity in the US. Now, the dividends, they look pretty random. They do pay quarterly. As you can see in 2020, they didn't pay anything at all. Then they started to pay in 2021 all over again, and they only made 2 payments. And then as far as 2022, they only made 2 payments. So they haven't done any splits, which is good. But it looks like they're trying to manage their money much tighter. And I wouldn't say they're having issues or trouble. It's just that they look like they're just preparing and trying to uh, gather their sources together and try to manage a little bit better because of, not only this year, but it looks like they're trying to prepare for the upcoming year as well. The stock has, the company, not the stock, I couldn't say the stock as well. So they've been around ever since 1959. And as I stated before, I believe the main company is in China. Again, I don't know where in China. I'm going to see if they mention it anywhere here. So it says they operate across Europe, Asia Pacific, North Africa, Middle East, America, and Latin America. So it looks like they are worldwide. Now, as for the company itself, uh, in order for it to grow that big, I don't know how they grown that big. Um, who knows? Uh, maybe they've just done acquisitions. But again, this got to be one of the major companies in China as a bank. So they've grown tremendously from 1960 all the way till now. So we can see here some key executives. I want to look at that real quick. I want to see something real quick. So it's showing me their salary. So close to 5 million. This guy's receiving yearly, and this guy CFO receiving a little over 3.5 million. Now, the education, I'm not looking at that, but I'm trying to see if they hold any shares and what kind of shares. So insiders, I want to see. Uh, so I'm sure a lot of institutions have been going into this bank. You can see here a lot of companies been letting go. Goldman Sachs, Jane Street Capital, Parametric, Portfolio Associates, Northern Trust Investments. We have all these investment companies bailing out, pretty much decreasing their holdings. They are in a few ETFs, which is fine. I want to see that it holds up. The reason I say this is a tricky stock is because, again, they're considerable strong company. It's just that the U.S. as of now, they like to do business with China, but they're trying to limit how they do business. So what I mean by that is, certain businesses they want to keep and try to maintain that relationship, especially the tech sector. But when it comes to the banking, I don't think the U.S. really cares about doing banking services with overseas. That could easily be done here. I don't see why. What's the purpose to expand on it? I mean, I continue to maintain or to limit it, but yeah, we'll see how this stock holds up. So just because of the market cap and it's so big, I'm sure that it has some value. The 52-week high and low, it's not much. It seems like a stable company. They've been around for years. I know that the shares are not acquired that much, but some stability with this company would be better. So I'm actually gonna say maybe, and this will be evaluated at a later time. So it's not a yes or a no; it's a maybe. So the reason I say that really is because just of what's ahead of how we're gonna do business with China and what's going on with China. So I don't want to say something that I'm not too sure about. So again, maybe later on this can be evaluated. Next stock up, ABTX, and my battery is about to die. So we have here ABTX, no volume, crappy stock on the chart. Estimates are going down. Now for the analysis, we have here a rated 3 out of 5. So quality, the highest one is momentum. So 6.78. So now 6.78 in momentum. And then we have no volume. So that doesn't make any sense. Oh, actually, I saw, where did I see it at? said delisted. This stock is actually delisted, so I apologize. So we're going to move on from that one and actually say no. I'm going to say no and cross that one out and just move on to the next one. So I apologize for that. So last stock that we have is ORRF, Orrstown Financial Services. So the stock is on an uptrend. It looks okay. 52-week high and low. Not much to brag about. Earnings could be better. Market cap is at 286 million. Very small company. Again, banks are on a uptrend. I don't know why. Maybe they just, it's just a sector rotation. So for momentum is at 6.42. Value is at 5.8. So it has some momentum. I'm not surprised because it's a banking sector. Volume is pretty low. Now for the shares, we have a quite amount of shares that are acquired. So we're talking about close to 500,000 shares that are acquired. Now we just want to run through the company a little bit. They have been beating their earnings in Q1 and Q2 by wide margins here. Even a small margin in Q3. Now, Q4 has been estimated north of 80 cents, so at least 80 cents. I have here 81 cents estimate. So really high expectations for this company. This company, it looks like almost like a growth stock with their numbers just because they've been beating their earnings, so that's a good sign. Debt is at 90%, pretty average and typical. Net income has been growing as well, so that's obviously a good sign. Now for cash flow, if they're positive, this can definitely look like a growth stock. So definitely, they have over 80 million in cash flow. So definitely a stock you want to put on your watch list. And the actual chart looks good too. And then as we can see here, it broke new highs even in 2022. So right here, it starts to rebound in October. And then as we can see here, a nice uptrend from there. And it just took off. So it doesn't seem like much, but that $4 difference, again, made it reach to new highs. So for this stock, ORRF, again, for the long term, I'm going to say no. But for the short term only, this stock looks good. So I say yes for the short term. So overall for the long term, no. So there's my answer, because that's what I'm seeing. So for the banking services sector, it's kind of a hot sector. It's not, it's very selective, but that can change like any week or any day. But so far, so good. For the month, it looks pretty good. And the month is almost over. So again, for the next month, I would say it should be continuing the uptrend. And then on top of that, for the quarter, to end the quarter, I think that would do it. So by the end of the year, maybe get $1 out of this stock, and that should be about it. And move on, collect your winnings, and that'll be it. So again, not a good growth stock as of right now, but it needs a little bit more work, needs more of a longer trend, and needs more time to decide on that. It may be acquired, who knows? But anyhow, it's doing fine for this quarter. So that's all I have for this stock. So that's it. That's all I have for you guys. Thank you guys for watching. So again, the only stock I said yes to was ORFF. We're going to do a small recap. And then that's pretty much it. So thank you guys for watching. If you're watching, I know this video is too long. Eventually, when I start finishing all these sectors, I know my videos are longer, but just to see and sum up everything all at once in one video. But in the years coming, I want to say next year or maybe the year after, but maybe about 2 years from now, then I'll start doing these stocks individually and still do the deeper dive. But then I can do comparisons as to what I saw from the years prior until now. So the videos will be shorter and you will see individual stocks. So again, thank you guys for watching. If you're watching, if not, this will be created as a log for me to see back and see comparisons from back then till now. So that's all I have for you guys. So again, thanks for watching. I'll see you guys in the next one.